Dr. Stanford, thanks for appearing back at committee. I know you're no stranger here, so welcome back. You cited a number of statistics, and frankly, I don't dispute any of them because I think we're looking at the same data. In particular, I think there are obviously very wealthy people who have a significant number of capital gains per year. But the same data, the LAD data bank, also shows that capital gains are very, very rare in a person's lifetime, and frankly, if there is a capital gain over $250,000, that it is a once or twice in a lifetime event for a large number of tax filers. In fact, those who have over $250,000 in capital gains on a perennial basis, i.e., say 10 out of 10 years, is only about 160 tax filers out of the sample that they showed. So it is, in fact, a small number of taxpayers which may get a large break. But would you agree that there are some individuals who once or twice in a lifetime will get caught up in this capital gains hike?
Certainly that's true, and I think I said that in my previous intervention. A few things to keep in mind there. Number one, there are important opportunities for individuals who have a rare capital gains event to try and reduce and average out their exposure, and that includes the $250,000 exemption, obviously, from the higher rate, which is stackable across a joint ownership situation. And it also includes the capital gains reserve system, which allows people with an occasional capital gains to average that out over several years. And I'll also point out that this same argument could be applied to other features of our tax system. We have a marginal system of increasing marginal tax rates on personal income, and there are people who end up in the top rate just once or twice in their lifetime, but they still earn that income in that particular year. We do not have a generalized income averaging system in our tax system. And so on some level, if you've made that much money in a year, you should indeed pay taxes on it.
Indeed. That's the way the progressive tax system works. There was also a statistic that suggested, using the same database, that 50% of those who have gains over $250,000 otherwise have other taxable income of less than $120,000. And some individuals, 10% of these in this category, have incomes of less than $20,000. Would you support, or do you think it would be wise to try to narrow the impact of the capital gains measure on just those individuals who are truly in that top 1% to 2% of income earners, and not apply to 100% of the general public?
Well, again, the number of individuals who claim who receive large capital gains year after year is small, but they account for an overwhelming share of the total capital gains that are claimed, and an overwhelming and even larger share of the tax benefits associated with that. Now, clearly, the government was attempting to narrow the impact of this measure with the $250,000 threshold. And again, they were following advice from academic economists who've been publishing on this for years. So at some
Mr.
point,
Stanford, I'm going to run out of time. Mr. Stanford, I'm going to run out of time. So I just quickly, would you be in favor of narrowing the application so it's just with those who have high perennial either capital gains incomes or total incomes?
I think there's provisions in the existing legislation that do that, the $250,000 threshold, and other provisions in our tax system, including the capital
I'll take that as a yes. Understood. Ms. Brusk, you suggested that many of your members wouldn't be impacted by this, but you have about 3 million members, right? I know of a number of your members who own rental properties that hold them, and not a number of rental properties, but even just one or two that actually hold them in a corporation. They will be taxed. Like, this will impact them immediately. Should we exclude them from this legislation?
The number of members that are in that profitable position are minimal at best, I would argue. The members that I hear from, the workers that I hear from, are certainly not in that kind of a wealthy situation where they have to worry about these situations in terms of the capital gains being increased on their profits.
But back to you, Ms. Brusk, about some of your members. Would you support narrowing the application of this such that we're not going to catch up people who otherwise have very modest incomes, but that have a one-time capital gain event in their life from its application?
I don't support changes to a bill that has yet to be really fully delivered in that way. I think that a one-time event, there are ways to navigate those. We heard about the exemptions. We heard about various different opportunities to lessen the burden, so to speak. And so a one-time event is going to impact very few average workers across this country. The benefit of gaining additional tax revenue far outweighs that one-time event an average worker may have to increase that tax burden by, 13% more of their income being taxed.
Okay, so you're okay with the proposal, the Ways and Means motion, if that becomes the final bill, is that you're okay with that?
I am.
Okay. Mr. Stanford, or Dr. Stanford, I should say, you mentioned that the revenues from this tax were paying for some laudable public policy objectives. But when I look back at the projections from the Finance Department, just a year ago, the debt service costs versus today have gone up by $8 billion just in this current fiscal year, and about $10 billion per year for every year by the time we get to 5 years out. It seems to me that a large share of the revenue from this capital gains tax is actually just paying debt service costs.
If you look at the forecast, the budget forecasts, for some time they've been projecting an increase in debt service charges, both because of the increase in the overall number of size of the debt, but more importantly, the higher interest rates that we're currently grappling with. I think that there's a reasonable logic to linking the incremental spending that was announced in this budget with the incremental revenue measures that were also announced in this budget. Now, of course, money is fungible, so it all goes into the same pot.
I'll just cut in there. I'm linking it to the incremental increase in the debt service costs over and above what was projected a year ago. So, I mean, it's the exact same comparison you're making. You're saying that this money is going towards incremental savings, spending objectives for dental care, et cetera, but there's also incremental expenses that were not projected a year ago.
And the incremental expenses could have been covered from the other changes in revenue forecasts that were also part of this budget. So, I think you're right, sir, that because of the fungibility of money, you can't link $1 on the revenue side to a precise dollar on the expense side. But I think the fact that both of these were incremental policy announcements contained in the same budget, I think makes for a fair connection between the two.
Thank you. I'd be really appreciative of those on the call who have access to some of the data. If they would like to show the perennial capital gains earners, we could narrow this application to those who abuse the tax system and who transfer or try to claim more capital gains taxes than income tax. But I do think, as we've heard today, testimony from people who are living it that are suggesting that this tax isn't just going to be on the 0.13% top income earners. It's actually going to be on a much broader group of individuals. And with no disrespect to those who are educated, I'm reminded of William Buckley, who said he would rather be governed by the first 2,000 people in the phone book than the entire faculty of Harvard. And I would paraphrase it, suggest I would rather be governed by the first 2,000 people of Ms. Bruss's members than some individuals who have not spent the time working in the trenches or building a business and who say in theory there are these rich people who abuse the system without actually listening to those who are living in the system saying, well, actually, I'm one of the people affected. I'm not that person you're speaking about. So appreciate the time today, and I'll yield